Hi everyone, it's Alexi Uzas here. Are you trying to get your film in front of a film finance company? In this video, I'm going to explain to you how film finance companies work and how you should approach getting in front of those companies. For the best filmmaking advice, subscribe to my channel and hit the bell to be notified when I post a video every Wednesday. In the past 5 years, I've financed and produced 4 feature films, and I've helped another 4 films close out finance, and now I'm helping my clients around the world do the same, and you can be one of them. The first thing that I want to talk about is what a film finance company actually is and what it does. So a film finance company is a company that provides finance solutions specifically to the film industry. And that's an important distinction to make because film finance companies usually don't operate in any other industry. And that's because film finance services and solutions are very specific to the film industry. And in the same breath, you're not going to find a general finance company that operates in film finance because it is so specific to that industry. And film is such a unique financial proposition in that is so high risk and high reward that a lot of the more traditional finance companies just don't operate in that space, and they don't have the knowledge and the expertise to be operating in that space. And so a film finance company will offer solutions to a producer or a production company that will help them get their film financed. And it's to be, again, distinguished from a studio that could come in and finance a whole production, right? So a film finance company isn't going to do that. And it's important to know that from the start. So when you approach a film finance company, it's to help you with a specific element of the finance plan, and I'm going to go through what those elements are in this video. But I just want you to understand at this point that if you're hoping or trying to approach a film finance company, don't think that they're going to come on board and finance the entire project. That's really only something that a major studio or now a streaming platform like Netflix and Amazon might do. But with the film finance company, they're really just looking at specific elements of the finance plan, and they're able to provide finance solutions to assist you with those elements. Okay, so now we're going to talk about the different types of finance solutions that film finance companies can provide to a producer or a production company. Now, this might be a little bit dry, so I want you to hang in there. We're going to try and make it as interesting as we can for you. So the first solution that they can provide is called debt financing. And typically this applies to rebates or tax credits that a producer or production company can access to help them make their film. And the way this works is that typically a producer will apply to a state or federal body, and it will get what's called like a provisional approval for the rebate. So the project will get assessed, you'll submit a budget and a finance plan, and that agency, that government agency, will say that based on the documentation, the film's been approved. Now that creates a cash flow issue for the production company because while they might have been approved for a tax credit or a rebate that could be anywhere from 25 to 40% of the total cost of production, the producer then needs that cash to be able to spend on the production. And so that's where a film finance company can step in and provide essentially a cash flow facility. So it's loaning you money against the tax rebate or the tax credit that you've already been pre-approved for. And that will allow you to then use that cash and cash flow it through the production, use it for production or post-production. And you will then pay back the finance company once you get to the end of production and you've prepared all your books and your accounts have been audited. You'll then receive that rebate back from the agency, and then you pay back the finance company. So what they're doing is essentially stepping in and providing that rebate amount to you upfront as cash so that you can use it for your production. Now, that type of financing is also used in some other areas, particularly in the US. It's used in SAG deposits. So when a production company has to deposit some of its SAG union fees, then a finance company can actually step in and provide that cash up front so that the production can use it. And then again, once the film's finished and SAG reimburses the production company then simply pays back the finance company. So that's those two examples are kind of what we call debt financing, and they're pretty typical in the film industry, and I would say that they're the most typical form of film financing, and they are extremely low risk for a finance company. So there are a number of different finance companies out there that provide that type of service. And typically they'll charge anywhere from about 8 to 11% of interest and fees. Another area that a film finance company can cash flow for a production company is the advance that a sales agent or a distributor is intending to put up for the project. So when you attach a sales agent or a distributor, you're hoping to get an advance from them. And so what an advance is when a distributor or a sales agent is advancing you a certain amount of money that they will then recoup when the film starts making money from the release. And advances can range really dramatically depending on the project, the size of the project, the cast, all these sorts of factors. But what's important to know is that a sales agent or a distributor likely isn't going to pay you that advance in full up front. And the reason that won't happen is that the time from when you sign a contract with the sales agent, which is likely going to be in, potentially even before pre-production, until the time that the film's released, can be a long period of time. It could be a year, it could be even longer. And so a sales agent is kind of looking after their own interest a bit, and they want to hold on to that cash as much as possible and delay paying you until you deliver the film to them. And so that really shortens the time for them from when they've paid you until when the film's released and they can recoup that advance. Now, as a producer or a production company, that's no good to us because we need that cash. We need to use that cash through the production or through post-production. And so where a film finance company can step in is they can actually cash flow that advance for you. So they can provide that cash to you so that you can use it through production or post-production. And then once a sales agent pays you that on delivery, you then simply pay back the film finance company. And the way the film finance company makes money from that is they charge interest based on the amount of the advance. And so that's a really useful way to be able to, again, just get some more cash into the production. And it's a really useful form of debt financing that the film finance company can provide. So the next type of financing solution that I want to talk about is gap financing. And we hear this one a lot. And it's essentially where once a producer has prepared their finance plan, they realize that there's a gap in the finance plan. So there's a certain amount of money that they haven't been able to secure, and so it's sitting there as what we call gap. And a film finance company can step in and help close that gap, can help essentially provide that finance to the production company. However, the film finance company bases the gap financing off the sales estimates that a production company has received from a sales agent. And so essentially one of the preconditions of getting any gap financing is that you need a sales agent on board or a distributor, and you need them to have provided you with estimates of what they think the film is going to make in the marketplace. And the film finance company will then look at those estimates, and it will essentially run its own modeling on those estimates, and it may discount those estimates slightly because it may think that the sales agent is being over optimistic. It will look at which sales agent you've actually attached to the project, because it's important for the film finance company to know who you're working with and to trust that company. And so it will apply this modeling, and it will work out how much gap it's able to provide to you based on the sales estimates and the sales agency that you're working with. So this is something that is definitely something that you can access as a production company. It's very handy for you to be able to, but you're gonna need a sales agent on board or a distributor on board. And then it's really gonna come down to, how does a film finance company assess the estimates that you've received from that sales agency or distributor? So another form of finance that you can receive from a film finance company is equity. So equity is similar to the finance that a private investor might provide. So it's really a cash investment into the production, and in return, the private investor, or in this case, the film finance company, is going to take an equity position in their film. So they're usually going to receive some sort of equity entitlement by way of net profit in the project. And this is something that is much less common amongst film finance companies. And the reason it's much less common is that it's much higher risk. And so film finance companies tend to be a lot more risk averse than even private investors. And they're really just focusing on finance solutions that, they understand a lot more, and that they're much more based on figures that exist within the film industry or within your project. So with debt, they can look at the rebate and look at how much money you're going to get back. With GAAP, they can look at the estimates, and they could look at how much money, that's kind of projected to come into the project. With equity, it's a much more of a risky proposition for them, because they're kind of having to make their own assessment on the project as well, and assess what they think the market value of the project is. So whilst equity is a solution that some finance companies provide, it's really, you're going to find it a lot more apparent in much larger productions. Typically even, Hollywood productions that are being made by maybe an independent studio that have cast attached or have some IP attached to it. And it's really less common in that kind of lower budget or micro budget film. So those are the three main types of film finance solutions that film finance companies provide. So at this point, I want you to comment below and tell me about any experiences that you've had working with a film finance company. Okay, so now we're going to talk about what you need in order to engage a film finance company. So the first thing that you're going to need is a script. It's going to be absolutely necessary for you to be able to provide a screenplay to a film finance company. So make sure that you've got that to begin with. The second thing that you're going to need to provide is a budget. And so you really need that prepared as a line item budget. It needs to be a very comprehensive budget. It needs to be based on real estimates. The best thing that you can do is to actually go out there and get quotes for everything. So for example, you'll want to know exactly how much your camera equipment's going to cost, your lighting equipment. You need to get all those figures as accurate as possible. In order to work out your labor costs in the budget, you're likely going to need a schedule. So, you want to get that schedule done. Make sure you know exactly how long the shoot's going to be, how many days it's going to be, and make sure you have a cast breakdown so that you know how long each cast member is going to be on set. That way your budget's going to be really accurate. And then the third thing that you're going to need is a finance plan. So you're going to need to be able to show the film finance company how you intend on financing the project. Now, if you're approaching a film finance company for some gap financing as well, then like I mentioned earlier, you're going to need a sales agent on board. And so you'll likely need to show them a deal memo from that sales agent or distributor. And you're going to need the sales estimates that I spoke about earlier as well. So you're going to need to provide that documentation to the film finance company as well. Now, in addition to those core documents, you may also want to provide some other documentation. Sometimes you can provide a treatment just to give them an idea of the project. It's not necessary, but they'll usually ask for any other documentation or information that you have. If you have some cast attached, you can tell them about who you have attached. And so you really just want to provide them with the best kind of overall picture that you can about the project. Now that we've spoken about what film finance companies do and what sort of finance solutions they provide, as well as what material you're going to need to engage with a film finance company, I want to take a moment to talk about how you should be approaching film finance companies. And really, film finance companies should operate as a team member that is part of your project. But by no means should a film finance company be the backbone of your finance plan or your plan of how you're going to get the film financed. So I want to elaborate on that a little bit. As a producer, it's really up to you to be able to put together the finance for your project. And if your plan is to simply approach a film finance company to have them finance your whole project, then unless you're working on a studio project, like I mentioned earlier, or you're going straight to a streaming platform like Netflix, it's not going to be possible for you to go to a film finance company and just have them finance the entire production. So if that's your plan at the moment, you really need to go back and kind of understand how independent film finance actually works. And you can check out one of my earlier videos about that. And you want to understand that a film finance company is really just there to work with you, to help you complete some of the elements of the finance plan. So as an independent film producer, you're often relying on tax rebates or credits. And so once they're factored into the finance plan, that's when you can bring on a film finance company that can work with you to help cash flow that rebate into production so that you can use those funds during the production or post-production. If you've managed to attach a sales agent, then you can, and you have some kind of gap in the finance plan, then you can approach that film finance company. You might already be working with them on the rebate, and you can ask them if there's any way that you can work together on trying to fill that gap based on those estimates that you've got from a sales agent or a distributor. You can even approach them to see if they will provide any equity, but like I said, it really can't be the backbone of your relationship with a film finance company because it's not really their core business at all. And most film finance companies don't even do equity. They don't even offer that as a solution. They really just focus on debt or debt and gap. And so you don't want to be approaching a film finance company with that mentality that they're going to be kind of your solution to getting your film finance. If you're an independent film producer, then you need to be aware that going out there and raising that private finance is going to be a job that really falls on your shoulders. And it's going to be up to you to bring in all those different elements of the finance plan and then just work with the film finance company to help you facilitate some of those elements. Now you know a bit more about film finance companies and how they work, but you might be wondering, okay, well, I'm an independent producer, so how do I go out there and bring in those different elements of the finance plan that you've spoken about? Well, I'm making myself available for one-on-one consultations to speak about my online program that gives filmmakers the tools and the knowledge that they need to be able to go out there and raise finance for their project, particularly private equity. And so if you want to set up a time to speak with me about your project, click the link in the description and set up that time, and we can talk through your project and start putting together a real strategy and a real plan to help you get your film financed and into production. Check out these videos next on how to up your film financing game. And if you like this video, hit the like button, subscribe now, and share it with your friends.